Hello traders, Nick Shaheen here looking at Micron. Not my favorite stock at these levels. It was my favorite stock when it was under 30 and everybody was hating on it. I was selling puts and having to defend myself. They called it a value trap, but that was a couple of years ago. Up here, not for me. It seems like the rhetoric out of the company doesn't match the actual results. It's not a bad company by any means. It is a behemoth in its field. It's just too expensive relative to itself from what I've seen in the past. Time will tell whether I'm right or wrong, but I've been pretty dang right at trading it. I've shorted it when it didn't deserve to be at levels I thought were too high, and I went long when it was way oversold. And this is the P&L perspective. So 4 years ago it was 20 billion in revenue. It went up to 30, then back to 23, 21, and now running of 25 somewhere in the middle. So you can see my dilemma of where is the acceleration. They will probably have an explanation. Experts will probably say I'm an idiot for saying, well, whatever I'm saying, but in the truth of the matter is all companies are in the same business of making money, growing their top line. Actually, the goal is to grow the bottom line, and then in the process, you have to grow the top line. So if you're a growth company, you're judged on not value here, but growth rate, like they judge Amazon. If you're a value company, they judge you on growth earnings. So down here. So this one, which one is it? I'm confused. I don't think we can say it's a growth company. That's mathematically incorrect. We can't say it's a growing the bottom line as a value company because it fluctuates. 5, 14, dang, that was a good year. Did they have a sale of asset or something? I'm not sure what what happened there, but it wouldn't be in the P&L. Anyway, so 6 billion, 3, that's COVID. Everybody gets a pass. Now back to 4. So nothing is clear from that perspective. Let me see if we can get smarter about it. Cash flow from operations still pretty big, 8 billion or so, downtrend, but not like alarming. It's not bleeding cash or anything. Profit margins are dropping, but that's COVID. Everybody gets a pass. Debt to assets, not crazy increase, so there's no dings from that. Just my beef is it's too high relative to itself. 3.5 times sales if you want to judge it as a growth company. 21 PE if you want to judge it as a value company. Either way you slice it, it's way more than it used to be. So why? That's my beef with it. So now let's talk charts. The fundamentals on what advantage it has against its competition, etc. That's not on me. I'm not an expert in it. I don't pretend to be, but I'm pretty damn good at trading it. And I can tell you by looking at it, the sellers are in charge because the trend is lower highs, lower lows, albeit not aggressively so. So now the battle comes. What happens at 81, 82 and a half versus what happens at 74, 72 and a half. There's the battle. Now, why do I call it a battle? Because that's what's going on. And the danger is not from within itself, which we haven't. I usually start my discussion by what does the world look like, the macro. I haven't yet on purpose because that's the risk. So we have had lower highs. Trust me, I don't draw it as a trend line like, oh, it's crossed, let's go. No, just to show how the sellers are winning that perspective. Short-term lower highs. So you can draw trend lines however you think you see them. It's crazy because that's why I don't use them. I use what? Absolute levels. I know this was a floor, this was a floor, it was a floor, it wasn't a floor, it wasn't a floor, now we have a new floor, and now they're trying to recover and get out. I contend that this zone is incredibly resistive from the volume profile. That orange line, sorry about that. That orange line, I did not draw it by hand. This one draws itself automatically. And guess what? This is the place where Wall Street, not me, that's history, not me, says that it's going to be busiest. It has been busiest. That's right there. Look, the volume. By far, this is the second busiest. So once you fall below it, it's hard to get back above it without a reason. They just reported earnings, so what's the next reason? The whole market push? So it needs the whole market push higher. The market has never been higher. They're setting records. And the S&P last week, the Nasdaq just bursting, and this one is stuck in muck here. This one here, up here, it's still high. I'm not crapping over what they've done. I'm just pointing out points of action, lines of action. So now we had a floor that may or may not be holding. We have a new floor that is holding at least 2 candles, and guess what? It was a battle zone from a long time ago. So here's the risk. And now please don't fall out of your chair, because that's going to upset a few people. I am not hating on the stock by any means, but there are so many necklines that look like Head and Shoulders, and I'm not a technician. I'm just telling you what what is happening out there. My son is like tearing down the house. So there are zones in contention that, if lost, could carry forward momentum down or up. There's none up right now. There's nothing but clear resistance with the potential to break out from them without a catalyst, though, or just break down. So arguably you can say that there was a breakdown right here, and the price down of this should be somewhere around that, like eyeball. Now, if you say no, the breakdown actually happened here, then the drop is somewhere about that eyeball. This equals that eyeball. If you say no, the breakdown hasn't happened yet, they're still fighting for the neckline, so it's somewhere around here. So the problem is about this big now. So any which way these two equal. So any which way you slice it, the bulls need to stop dicking around with this thing and just break the trend. So how do you actually make a floor? You first stop making lower lows. So let's take all of this. So this is word to the bulls. Trust me, I'm not on the bear side. I like to buy dips that matter, and this is not a dip that matters yet. It's a trade. I could buy it as a trade going into this next time it fails, but with a tight stop, because I don't know what's going to happen here. So step 1 is stop making new lows. Step 2, make headway going up there. In other words, start establishing, if this dips, is okay, just stay higher. And if it dips again, it's okay. Just establish a progress. It's okay to continue making lower highs, but stop making lower lows, start building higher lows. They both come to a blows somewhere here, and you can just push through here one leg at a time and start making another trend higher. Otherwise, if the markets sneeze for whatever reason, a bad jobs report, good or bad, I don't know if good news or bad news, good news is good news or good news is bad news these days, who knows. But Friday we have a pretty big catalyst potentially. What if it's super hot jobs number, and then suddenly the talk will be, oh my God, the Fed's going to taper, and everybody freaks out, and CNBC will have a special report with a bunch of ads. So if that happens, could this trigger the trend line? And if it does, these are frothy. Again, it's not an assault on the integrity of the company. It's the fact that it has no history. Look at the volume up here. So if you get below this chunk, this dark cloud of volume, there's going to be a lot of hard work and reason to get back into it versus vacuum. Whoop. So these came too fast, therefore easy come, easy go potentially. So did I just say short it? Absolutely not. Did I just say it's going down? I'm saying no, but they better stop dicking around, because the floor below them might be paper thin at this point. There are easier ways to catch this falling knife and easier places to do it. So if I'm long, do I panic out? Probably not, but I should consider the fact that I can sell some calls and buy some puts to kind of hedge my bet a little bit, or get a little bit smaller. If I have profits, I should lock some in. If I'm looking to get long for the super long term, this is not an obvious point of entry. It's not bad, but it's not an obvious point of entry. Therefore, if I do usually take 100 shares, I should take a nibble. None of this is advice to trade. I'm telling you what I would do with a chart that looks like that. Now that I zoomed out on a weekly basis, check this out. So now we talked neckline this, neckline that. Is it here? Is it there? Go out to the weekly chart. Declutter the thing. You can totally see there was a wall here, so that line matters. What the heck is this? That, ding number 1. It's not a disaster, but ding number 1. Okay, so the other one is nice cluster here. These are weeks, so that's over a month. of battle zone. Now this is the important candle in my opinion. Look, if I draw a line on the top of it, on the bottom of it, we get where we're at right now, almost halfway. If I draw a line where they closed, the little stomach, the little doji, it has served as a bottom. So here's the thing. If I consider this a platform, because this is a nice consolidation zone, this is a inverse cup, and if this one fades, because this is definitely resistance, then you lose that one. What do you get? Caterpillar. No, I'm just joking. That's what I call it in the chat room. This is an inverse cup and handle. How far does it go? As big as the hump. That's what technicians tell us, which puts us in this zone. So I think there are supports along the way. This is definitely a support zone. This is definitely a support zone. The top here is definitely a support zone. So it's not like cratering. Of course, this can happen if the markets stumble. And guess what? Check this out. I want to get long the stock. I will load up if and when it gets here. You're laughing. If it doesn't get here, so be it. There are 1,000 stocks I can trade. Load up with exclamation point. I bet you I will probably, on the next correction, I will probably sell puts to somebody watching this video down below $40 in panic. Like one of these days right there, I would have sold probably in the 20s and collected $2 for it per contract. So 10 would be $2,000. All I had to do was buy the stock under 30. It's happened before in this one and in AMD. All right, Nick signing out.